Hello. So this is my first video blog. The reason I'm doing this video blog, I think it's a better way to kind of communicate my thoughts and my ideas for those who might be interested. I thought my first video blog should be kind of a look back on 2016 and maybe a few thoughts on what 2017 might hold for the world of LNG. So it has been an incredible 12 months. The last 12 months have been, of course, we started off on negative thoughts about the world. Oil prices were low. There was a lot of negative press about surplus in LNG markets. Projects were being delayed. Spot prices were crashing. And there was kind of doom and gloom all along. China and Korea were basically saying they're in surplus mode, so they're not going to take any more gas. And so no one really knew what the rest of the year was going to, really hold for us. Well, in the end of the day, here we are in December, and it has not been as bad as we thought it was. I think that, yes, we did have a bit of a stock market, a spot market drop. But then we also saw a nice rise towards the end. And I think that the rise, of course, was due to oil prices rising. Again, I've always said many a times that I don't think oil and gas prices should be linked, especially spot and oil prices. Spot spot LNG prices and and oil prices should not be linked, but they seem to be. And as we go into 2017, I think we are looking towards a year where oil prices will probably be a bit more firmer than they have been in the past. We can probably see a position where oil prices could be in the $60 to $70 range. And if so, then we could probably see LNG spot prices in Asia, hopefully, 8.5, 8.5 and up range. And that'll be very good for the world markets to kind of come back into equilibrium, because I think that's kind of a nice price for new producers still to be able to make a bit of money, to make their profits, and yet still make the gas affordable. So let's talk a little bit about demand first. I think demand looking forward and demand this year. I think one of the surprises to some, but not to others, has been really the growth of the emerging markets. The emerging markets are really what's carrying the LNG markets now. Emerging markets are buyers that, 5 years ago were barely in the LNG world, and maybe 7, 10 years ago were not even existing. And that also includes brand new buyers that have come on kind of in a big way in the last, 1 or 2 or 3 years. We've heard a lot about the China story, and I think China is going to be a place that's going to increasingly use a lot of LNG. A, they can now afford it. B, they have the growing infrastructure. I mean, there are countless companies, both private and state-owned, federal as well as provincial, that are talking about building LNG terminals, that already have LNG terminals or have access to LNG terminals. So we're going to see a massive proliferation of land-based LNG terminals in China very soon, if not already happening. All the negative press about pollution, which seems to come every year at this time of the year, is obviously making the Chinese government more concerned about where the markets are going to go for them. So I see that the coal markets actually being increasingly soft. I think that pollution concerns and the fact that now China can afford it and the infrastructure exists, we'll really see LNG being the big new fuel for China. China transportation LNG is just booming. I've seen hundreds of LNG trucks lined up to fill up, to go into places that are not connected to the pipeline grid. We see LNG refueling stations. We see LNG trucks, LNG buses. I don't think we can anywhere else in the world is LNG is considered such a mainstream fuel as is it in China. And of course, China is going to import a lot of that LNG. They're going to have some domestic production, but most of it's going to be imported. And that import is really what's going to be driving a lot of the LNG markets in the next 1 or 2, 3 years for sure. Now, of course, China is a price-sensitive market. People have said that all along. I don't think it's as price-sensitive as people think it is. As you build up more infrastructure, as you build more trucks, as you build more LNG refueling stations, as you build more buses, suddenly your flexibility of using LNG as a fuel goes down. And this is really going to drive LNG demand in China for at least the next few years, if not longer. So I'm very bullish on China. I think China is going to be really driving the LNG world. India, of course, more maybe of a potentially price-sensitive market, where when LNG prices do drop, we see power sector come along. And when LNG prices rise, we only see the main consumers being the petrochemicals and the industrials. But again, the infrastructure is growing. Pollution concerns are getting to be a major issue. And I think the realization that you really cannot be building coal-fired power stations everywhere that easily. And of course, India has a lot of stranded gas-fired power stations that are just waiting for the right price of gas to work. I think what we're going to see is some reforms in the government in terms of the electricity prices, and that's going to really drive LNG demand in India as electricity prices improve to become more kind of world levels, less of a subsidy. Then we shall see India importing more LNG for its power sector, and of course the industrials and all these guys will continue using a lot of demand. Yeah, Indonesia is another country that I think there's lots going to be exciting things are going to happen. They're talking about 35 gigawatts of power. Obviously, there's not going to be a lot of domestic supply because the infrastructure pipelines don't exist across these islands. So you're going to end up importing LNG, and there's very little domestic LNG other than maybe the train in Tangguh that's really available for the domestic market. One thing that's often been overlooked in all of this is the fact that around the world, these low oil prices for the last few years have killed exploration drilling. And when you kill exploration drilling, it's a very short-term kind of a fix to help the countries or the state oil companies or the private energy companies' balance sheets, because they can stop these expensive exploration wells. But the impact is, well, then you have less exploration. You have less exploration means you find less gas. You find less gas, that means you suffer from production down the road. Production declines. And these countries, especially places like Indonesia, which have massive gas potential and were drilling lots and lots of wells 10 years ago, have hardly now drilled any exploration gas wells at all. But when you don't drill a gas well today, well, 2 years from now, you're going to suffer a massive drop in production. So Indonesia really cannot be counting on its domestic gas at all for any of its future demand growth. It's really all going to come from imported gas, and that imported gas is going to be, I think, at the end of the day, LNG. So that's quite exciting again for LNG for Indonesia, a very bullish story for Indonesia, and I think that is kind of similar to stories in, as I said, in China, in India. And we see places like Malaysia needing to import because obviously their exploration is not good enough, their domestic production is declining. We see new markets. Who would have imagined Bangladesh, Pakistan, Jordan, these countries that today are becoming, quite acceptable to be markets. I mean, Bangladesh in a few years, but Pakistan definitely. A few years ago, we said there were no way they can ever afford a rich fuel like LNG. Well, they are affording it, and they're affording it very well. So, emerging markets is going to be that big growth story. Latin America, I've spent a lot of time in Latin America recently, and everybody needs gas. In Brazil, which is the largest gas, exploration company, largest economy in South America, Petrobras is no longer wanting to be in the domestic gas business, can no longer supply domestically, and really just wants out of this whole thing. Everybody's relying on gas coming in from neighboring countries like Bolivia. Well, there's not been much drilling in Bolivia either. And the future shale gas in Argentina, well, that depends on many factors, including the political situation in Argentina, and that'll take a few years for the pipelines to get built out. So as these economies continue to power forward, they want gas. City gas companies have expanded all over this continent in Latin America, as well as in Asia. And we'll see more and more city gas grids in places like Africa as well, and the Middle East. Well, these places need gas. And at the end of the day, it's going to be imported LNG that's going to drive the market. So I think all these people who have claimed that the LNG has seen its peak are kind of missing the point. Yes, we are seeing a maturity in places like in Japan and Korea that may have overcommitted to expensive LNG, which is probably kind of wishful thinking on their part. Now, I do think that the nuclear power station restarts are not at all going to happen the way they think they're going to happen. Things are going to slow down. These economies are kind of in a stagnant mode right now. As their economies pick up, they'll need gas as well. Now, they already have committed to expensive LNG, so they're not going to make a big impact in the new markets of the world, but they're not going to decline either. So, bottom line comes down to the fact that emerging markets are the big story that started really coming about in 2016. 2017, 2018 is going to be all about the emerging markets. And these emerging markets are going to drive the new LNG demand. So I'm quite excited about them. They used to be very price sensitive. And I think the message is they'll be less price sensitive and they can afford a bit more expensive LNG. As oil prices go up or stabilize in the $60 to $70 level, spot prices will stabilize in the above $8.5 level in Asia. And we will see more emerging markets quite happily taking the gas at that price. Because for them, They have no real options. It's still cheaper than oil. But more importantly, they have no real options. There's pollution, there's reserves, there's infrastructure. All these things are looking very positive for LNG. So let's turn our focus a little bit towards the supply side of the equation. We've seen a lot of projects FI come into production in the last couple of years, and a few more in Australia are going to come in the next few years. These were based on very expensive price of the fuel, of the LNG. They were based on the fact that the traditional customers are going to be Japan and Korea, and these guys will continue paying big bucks for the gas. Well, that's not really the case anymore. We're going to see gas prices stabilize it at the $8.50 to $10 level potentially. And if these projects cannot break even at that price, well, they'll shut down. I've always said that. I think that, often our analysts, our pundits out there talk a lot about supply and demand graphs, and they stack up all the supply volumes. But what they do is they stack up the LNG plant capacities. And as we know, in many, many parts of the world, plant capacities does not equal plant output. Plants produce less than capacity because the reserves are declining. Indonesia or Egypt are a great example of that. Political situation in Yemen. Or in the end of the day, the plants are not going to make money at that price. So in Oman, the gas is more valuable to go other places than going to the third train in Qatar, Khalat LNG or Oman LNG 3. So we cannot just assume that when a plant has a 20 million ton capacity, it's actually going to produce 20 million tons. I actually don't think it will. And that's often an analysis that's not done in enough detail by our pundits. So I think that if you're a low-cost supplier out there, emerging markets are going to be excited and take your gas to a certain point. They can afford a certain price. But if you're a high-cost supplier and you need a break-even of over $10 or $12 in Asia delivered to make your project viable, I think it's going to be a bit of trouble. And I think that you're going to see the partners in these projects trying to weasel their way out of their long-term commitments. Projects that may be taking FID won't take FID because there's really no reason for them to take FID. So any expensive projects, especially when you look at the matrix of capex per ton, are going to really struggle to get committed now. And the ones that are already in production are going to come in production soon will not run at full capacity. Pipelines, again, we had a lot of hopes a couple of years ago for Russian pipelines going to all over to China, et cetera, et cetera. Well, I think the reality is it's just not going to happen. It's not so easy to develop brand new pipeline systems across vast areas. Pipelines are expensive. Pipelines take time, the right-of-ways, et cetera, et cetera. So long-distance pipelines are not going to be the savior for Asia. It's going to be LNG. It's for Asia or for Latin America, for that matter. And so supply is going to have to come from new LNG projects that can supply at a competitive price. As I said, the older existing projects, the legacy projects, the Qatari, the Middle Eastern, the Southeast Asians, if they can still maintain their market share, which it seems to be their goal, then they'll maintain their market share in the traditional markets. But they, I think, are going to struggle to offer the terms that the emerging market wants unless they're willing to drop the prices dramatically or renegotiate contracts. So supply is also going to be an interesting story. Supply is going to be dominated by the cheaper projects that are already producing and by the new emerging projects that come along that can offer a cheaper capex per ton price tag. That's why of course I am, but I will be, for obvious reasons, incredibly bullish on US LNG. I think US LNG represents where most of the world will get its future gas from, because it's going to be the lowest cost production gas, assuming there's no political impairments to exporting American gas easily. Well, I think that then we will see US gas going to more and more places, especially the emerging markets, because the price levels make a lot of sense. So I think it is going to be 2017 is going to be a year where we see very few large-scale project FIDs, because large-scale tend to be expensive per ton. We see the cost per ton really don't go down as the projects get bigger. So if your cost per ton are high, well then, and you're a large project, I think it's going to be hard to find the right market. There are not that many traditional buyers out there who want contracts of $3-4 million tons. There's a lot of buyers who want 1 million ton or less. And that's the kind of buyers that you need to work towards if you're a LNG producer. But that's a lot more work, of course. They are harder to find. You need to educate the market and offer them a value proposition that makes sense and the terms that are flexible. But These are the projects I think that are going to be the most viable coming in the next few years. We have political projects like the Yamal project, of course, that's been done for political reasons, but whether it'll ever produce at full capacity, it remains to be seen. It all depends on China-Russian relationships, and I think no one can take a bet on those. So from the supply side of things, I think we'll see the projects that continue to produce at low prices per ton and a low break-even cost per BTU, they'll do okay. And the new projects that want to come to FID will have to have a low capex per ton to be viable. Other than that, I think it's going to be a good year. I think the sentiment is going up. Sentiment, of course, perception drives reality. And I think that as we see LNG being more of the fuel of choice, even ExxonMobil in their latest outlook is extremely bullish on LNG. I think the naysayers have been extremely negative. Last year, over the last 6 months, the pendulum always swings too far. I think we're going to see 2017 as a very interesting, a very good year for LNG. We're going to see prices stabilize. We're going to see new projects that are low capex per ton come on the market. And we're going to really get rid of the projects that are high capex per ton that shouldn't be producing in the first place. So happy New Year, and let's have a good year next year. Thanks, bye.